The advanced decline analysis did show a breakdown. Looking at weekly analysis real quick, let's see where we're at. We're going to probably, even though we did not make a higher closing high, the market did excel in some volume to the upside. Now, I think that the market's probably got another week, and this is one of the things that we mentioned, that we could slosh around. Let's see what happens in the market. It did sell off the high, but we don't have a definitive change in market direction from sell mode. We're in trading range mode still. So this is where I think we might get a little exciting, and I'm not really whipping out party favorites and saying this is a buy. I think the market is still in this little trading range. Maybe we break out and test new highs, and we've seen where we've gotten into market conditions and situations where we get into maybe a foghorn pattern. I'm not sure that that's one of the things that we're going to get into, but needless to say, we are channeling to the upside. Friday, when we were in the room, we noted several stocks that were forming high close dojis, notably Twitter, for example. And so I think it's just a refresher. We come in off the weekend, and all of a sudden we see the market back up near where the highs were after option expiration quadruple Friday took place. And so my feeling is that we might see, and probably are going to see, some upside, obviously, with the market up as strong as it is overnight. That seems to be the contention. The volume, like I said, was pretty strong on S&Ps. This is a weekly chart. I'm just showing you a weekly tally, but all in all, unless we get a real strong move this particular week, and this is not the last week of June, but we're getting closer to the end of the quarter, and I think a lot of people might get excited and falsely get long up near these, whatever this high is going to establish. And I'm still convinced that we are going to see a correction in July, starting in July, the market peaking out in July, and I think it will be in accordance to the, and I don't want to say it, I actually got some critiquing emails about someone saying I talk too much about a moon cycle and I talk too much about other cycles. And, you know, quite frankly, I think it's important that we understand there is a correlation with full moons. And I think my comment was, I do respect cycles. Seasonality is certainly cyclical or cycle analysis in its truest form because of the cycles of shifts of supply and demand. So I'm not going to get into cycle analysis, but for we actually, it was none of our members, it was a guest, in fact. So maybe they, I guess it's a free country, people can say what they want, right? But I'm not here to debate the astrologists out there that exist that do time markets right with, you know, certainly there's a valid market analytic research field in astrology, and it pertains to the markets, by the way, very strong. We have a very reputable individual, his name's Arch Crawford, who excels in that field, and amongst others. But what I do note is that almost every commodity schedule or calendar, as long as I've known it, has always talked about two things, full moons and new moons. And those cycles, many people look at full moon reversals, they're called. So in any event, there is some coincident factor to that. I'm not here to talk about that today, but I do feel the market itself over time is going to see, and the more I've done market analysis on the longer term, and this could be monthly, the longer I look at the markets, the more, believe it or not, convinced I am that we are actually forming a setup. And I'm going to put this, I'm going to type this in here in text so everyone can see it. And I think I could be, I hope I'm wrong, sort of, to some degree, or I hope I'm properly positioned in the market when it comes. But between, and this is kind of rough, but we have to gauge this, but from a timing element, between July through mid-October, I see a strong potential, a minimum of 5.8% correction and a maximum of 15, and I'm going to hit save. This page will always be up on the Spider page on the monthly on our AD lines. So I will have that in there to be reminded, but I'm looking, that's the kind of work from a longer term perspective that I'm looking for in the S&P. So quite frankly, I don't want to scare anyone, and we still have, and as I've always stated, in every correction, not all stocks go down. So I just think that there's relative weakness in certain sectors, such as the NASDAQ 100 versus even the Qs, the NASDAQ 100 is the Qs, versus the Russell, which the Russell begins at seasonally weak period of time. We talked about the AD lines. Nothing really changed there, both from we are developing a divergence situation. So it will be important, as I said on Friday, to see how this market, and I want to repeat what I said on Friday, it's going to be important to see where this market by Tuesday, I want to see where this market is, and I will buy back. We have a strategy on where we're in the August IWM puts the 124, 119, it's a 5-wide spread, and I'll probably on this rally here buy back the 119s and ride it to the downside. So I'm still sticking to that analysis. The fact is that the market is up, but we have other stocks that are performing well. So from a timing essence, it looks like we're on rally mode up here, probably squeeze some of the shorts. How much higher can the market go? I think there's going to be some rollover leadership on Friday, which makes it very interesting and kind of a hard market to look at. Let me share with you a tweet that I sent out on Friday, and one of the reasons that I got out of Valero, which may or may not have been spooked, but when we look at this picture here and we see the energy sector, the XLE down over 1%. When I look at the XOP down over 1.6%. OIH was also down significantly. There were only 2 stocks that were positive. One that I was long, Valero, and the other one was National Oil Wells, NOV. So when I look at an entire sector, there's two ways to look at this. You're long this one single stock that's positive barely in an entire sector, multiple stocks, sectors themselves, competitors that are down, and you're still long the market. Odds favor either you got 2 ways to look at it. The glass is half full, and boy, that stock is so strong you should stay with it. Or more realistically, by the way, crude oil prices, if this sector does start to decline, and why didn't you move your stops or get out of that when everything else was down? And so when you look at you're in a stock, it's really hard to look at the market and say, gee, I'm long, and thankfully we were long the right stock, so it was a small profit. All we did at this point in time, because it's now up to 60.90, just to let you know, and this is being recorded, we just lost profit opportunity rather than realized losses, which is always nice. But sometimes when you're faced with a trade and you have the entire, not energy XLE, but the XOP and the OIH and the entire sectors against you, generally speaking, it's not the time to sit there and whip out the bubbly and say, gee, I'm glad my stock relative to the rest of the market, because it's all by itself the strongest stock in the sector. Generally speaking, that's not the odds aren't in your favor. So what do? When in doubt, get out. That's the actual trade mantra. So let's go over, and one other thing that I want to just point out to you, we did see an uptick in volume on a cumulative weekly basis, but all the AD lines, advanced decline analysis on a week-to-week cumulative basis, are all still negative, as this market did perform positively on the week. Even with Friday's decline, let me reiterate, with Friday's decline from a week to week, prices gained in all the top sectors, and we had the strongest close in the Russell. So the market did perform well from a positive price change week to week, but the advanced decline analysis still shows that the market is not convinced. Now, this could change by Friday. We have to kind of look at Friday. You know, this is kind of like when we look at the market analysis to get ultimately bullish in the market. You know, I've always said it up at this level, and for the time duration that the market's been in, and the accumulation analysis or the advanced decline analysis, the breadth analysis, does not invite a very warm and fuzzy feely to the marketplace. The volume levels did not initiate a huge warm and fuzzy feeling to the market. Looking at the only one that, from a volume perspective, that increased in volume was the Russell, which broke out to new highs, and the volume kind of shows that this, and I said, this might be kind of in the camp of a blow-off top. We need to find if this market's going to find accumulation and see more stocks. The fact is that the Russell enters its seasonally worst period of time as in the next week or so, as we start to see a move lower going into October. So I've got my eye, and that's why I went with the August IWM, and that's why I am looking at the August to either add back on, or I will find out by Tuesday, tomorrow, mid-Tuesday. That's what I wanted to follow up what we said in on Friday's session of what I plan to do with that current position. All right? So, and I said I'll tweet it out or let you guys know, and so far it's, you know, just sitting there. So with that said, what markets do we look for in the short term where we want to be? Well, let's go through a couple ideas first and foremost. From a, in fact, it was funny because I know that we talked about a lot of stocks that we could certainly find some decent buying opportunity into. I said, if we're worried about finding buying opportunity, we have over 238 stocks that are under the 50-day moving average. So finding buying opportunities is not an issue. Finding the right buying opportunity, that's the issue. So long stocks in the S&P 500, ironically, we did get a few names that generated daily buys, but unfortunately, they're not in weekly buy signals. We talked a few stocks that we did, I guess, gems in the rough. Last week, the week before, we talked American Airlines. We talked about the housing sector. Lennar, LEN, popped in, is on our long stock daily buy list. So, I mean, we didn't get a lot of major names coming into the buy list for today. As far as high close dojis, and looking at, let's be fair and say how many stocks gave us sell signals. First off, let me finish with this. For weekly buy signals, new weekly buy signals, we had 48 names. One of the things I like to do is kind of look at how many of the stocks gave us, out of the 48, the majority of buys. Well, 16 are in consumer discretionary, and one of the sectors that we mentioned last week that would might be strong or relative strength. Remember last week we talked about XRT, and looking at the XRT, the retail sector ETF. So the XRT, obviously we've talked about it because here's the kind of the wedge pattern. It kind of broke out. Seasonally, it's counter-seasonal, but the volume analysis looks good, and we might see some further upside. So in this sector, we have Best Buy. You know, it popped into this little weekly buy. We have a mild upside. You know, we have to really dig to find some really good setups. Here's one, by the way, that's in the housing sectors, D.H. Horton. So D.H. Horton generates, and obviously we've made mention about this. So it seems to me that we have maybe some short-term buying opportunity coming into the housing, and possibly that's where we want to maybe focus in on this week. I do notice another little stock here in the housing, which is PHM, Pulte Home Group. So now the question is, will we get an opportunity for a pullback and then maybe look to ride? If you're looking at Pulte Home Group, I would say emphatically I would look for sometime this week, if possible, and it's not going to come today with a higher gap opening, possibly by Tuesday, Wednesday, maybe we get a pullback to the weekly MAs. But if it runs straight up to the midpoint of what we call a Marabuzzo, this big tall red candle, this is a weekly chart, this is the monthly chart, so it still, you know, shows on both time frames. I would be skeptical of thinking that this market is really prone for a massive move to the upside, this particular stock, based on that one single defined candle that engulfed how many weeks worth of upside work. It engulfed one time frame, all of this amount of work that it took from December all the way into May, and then moved one decisive decline. So the midpoint, the first test of that midpoint near 21 and a quarter or so, 21 even, that first test will probably act as resistance. It's not until this market closes on a monthly basis above that opening range that you will get possibly a move to the upside. Most of you TTU students know the pattern that we've just defined, but this is still overall, and in a seasonally weak period of time, it might be worth just hanging out and waiting for it to see if we get an intraday sell signal or an intra-week sell signal up near this 21 and change level. So I'm not thoroughly convinced now's the time to get into, not all stocks might go up in every sector. In fact, looking at the JP option expiration, 2069 up to the midpoint of that candle, that will offer resistance. It might get us better selling opportunities and buying opportunities in the next few weeks. But when I take a look at DH Horton, DHI, because I want to examine some of the stocks in that, this volume here, so look at the difference, and this will be your homework. Look at the stocks. We've got multiple stocks getting bid up. They're showing up on the scans in the housing sector, right? So we want to buy the strongest stock in that sector. Well, John, they all have weekly buy signals, what you're showing me here. There's another arrow, and this is DHI. And what I want to focus in on is the volume pattern. How does the volume pattern look on DHI relative to PHM? And if you notice, on a weekly basis, the volume pattern, longer term volume, is trending down in PHM, whereas in DHI it was pointing up. How about Lennar? The volume patterns there looks a little bit different because the volume not only on the weekly basis is going up, the volume on a daily basis is going up, and the volume trend on a monthly basis is going up. So to me, longer term, intermediate term, it seems that Lennar, out of the three names that we've just gone over, has probably a better volume pattern to the upside than PHM. Let's take a look at one last name. We'll go with Toll Brothers. So Toll Brothers, the longer term monthly, boy, that looks fairly strong. And the short term or intermediate term, the weekly is starting to pop directionally to the upside, and last week did make a higher high on the volume pattern. So for me, the choice is, believe it or not, between Toll and Lennar, and between Toll and Lennar, if I had to only choose one, my top dog would be, based on the volume patterns, Lennar. Another way to play this, and one that we are looking at, would be, of course, just take a gander at, instead of being stock specific, the ETF, and be looking at the ITB. So the ITB, of course, is the exchange traded fund that trades all of the stocks. So, you know, you don't have a individual stock risk of maybe someone's coming out getting sued for poor building construction. They put in bad materials and find out, like a you know, a scenario that happened with Lumber Liquidators, where they were accused of using I don't know what, poor quality Chinese laminate flooring, something like that. And so that's a sad story right there, next to a sector like a Home Depot, which is continuously had moved up during that same time up here. So in supply companies, you know, one company might have a specific problem, and if you're invested in that particular stock, you may have a problem. So if you want, I think that when we look at my indicators, the person's pivot studies, and we look at the volume that goes with it, it's kind of putting one and one together, and then we can find out, well, what's the kind of the creme de la creme when you look at the intermediate and longer term volume study. So this is Target. And I mean, Target, you talk about Teflon Don. These guys had all that problem a year ago with the credit card, the consumer names being siphoned off, and boy, did they recover pretty quickly, right? from those that little debacle. And so all of a sudden they've broken out and continue. People kind of tend to have forgotten about that whole problem. They're at and trading near their highs. So the sector itself, and this is TJ Maxx, not near its highs, but the sector itself, and that would be looking at the retail components, there is probably more upside with some names than others. If you take a look at the biggest, baddest boy on the block, and that would be Walmart, not all stocks, as you can see, well, we don't have a buy signal, but that volume was pretty ugly long term. The short-term daily doesn't look healthy, and the longer term hasn't looked healthy. So until I get buy signals and volume accumulation, there's some I can learn to stay away from some stocks that would be a waste of my capital, as I would sit there and try to fight the tape, so to speak. And I want to be in some of the stocks that have more volume accumulation in them than others. But so consumer discretionary looks good. Consumer staples, energy stocks, I mean, there was only really two names that outperformed the entire sector in last week. Long term, I still, unfortunately, like Valero for the exact examples I just gave. Short-term volume looked good. Longer intermediate-term volume looks good. Longer-term volume looks great. But when you're long a stock and the only stock in this sector that is green marginally and everything's looking red on you, I think you might want to say, let's come out of that and reevaluate. We might get a chance to get back in at a cheaper price later. And I do believe that over time, we will have a chance to get in at a cheaper level. So anyway, that is looking at the scope of our longs, the financials. Out of, as I said, 48 names, the bulk of the names came from, it, as you can see, consumer discretionary. So just looking at weekly buy signals, intermediate term buy signals, we had more buy signals in one space, and it seemed to be a concentration amongst housing materials. Look at the, so I mean, that to me is, if I'm seeing that type of longer term signals being created in the weekly basis, it means that we probably have more longer term in money committed to that, which means bigger money, smarter money. Now, as far as short stocks, Apple, which I found to be, as we've mentioned, Apple not making a consecutive series of lower highs. It did not make a lower low last week, but boy, when the stock market rallied, there certainly seems to be something kind of wrong with Apple. Now, as we start to get into late June and early July, for some reason, it has more of a seasonal bounce to it. I was thinking that this market was respecting its strong downtrend. Volume levels, certainly price did not meet up with volume. Volume broke down. There was more liquidation, as you can see, in Apple. To me, that's not generating a real warm and fuzzy feeling. Even the short term trend is down. Longer term, intermediate term trend is down. Now the longer term's up, but the problem I have with my longer term is that we did not get a this volume action may be skewed longer term due to the stock split. But in the near term, this particular stock, the way Apple had been trading with the overall market, does not generate warm and fuzzy feelings to me. So in looking at what sectors generated sell signals out of the 22 names, none in consumer discretionary or staples, but energies and then financials. So the strongest sectors were financials for the month of May, and ironically, we had more daily sell signals. As you can see, this is not the time of the year you put on aggressive long positions. We started to buy Bank America in late April when we have that seasonal run, and then that was one of the stocks that we did fairly well with, and then we actually even identified, somewhere near that 1760, there is some pivot resistance. Now, is the market prone to move up? Longer term, the market looks great, but where the market is, and looking at this longer term Marabuzzo, which generally near a 50% of that area acts as resistance. Until we actually close over the open of Bank America on a monthly basis, this is still kind of in a trading range environment. So when I look at Citibank, Bank America, now Citibank, ironically, will most likely this month close over that Mariposa, which is ironic because remember they did a reverse 10-for-1 split. This is still a $5 stock in some people's accounts. They just got hosed on their position. This is no other way to talk about that. But long and the short of it is, friends, I can't say based on the weekly buys and the weekly sells that we have a major seismic shift in let's go student body long in the market. I do think that some of the trades like last week, Twitter, which we talked about in the room, which was going to form a daily high close doji, and we talked about how you can establish a long position ahead of if the market near the close is going to, you see that above that high, you can kind of step into the game and anticipate or buying into the close on Friday, and you should see some follow through. The volume there looked a little respectable. Another market that I'm kind of not bearish on in here is, believe it or not, TLT, 2 weeks of dojis, strong seasonality, and volume accumulation in the short term and intermediate term. So I would say for this week or coming into Monday, we're going to see maybe the surprise rally. But looking at the bond market back and forth, I would be more impressed to see how this market, if it comes back into like possibly testing in the bonds. I want to see if, to be honest, the area this 148.5, 149 this week holds over time, and then I'll be also watching to see if we generate a weekly buy signal, believe it or not. One of the other things I want to kind of mention is that in the S&Ps, in the E-mini S&Ps, we did this in our summer mentoring. I think it's fairly important to discuss as well today. When we take a look at the commitment of traders report, the small speculator is amassing a very long position. Let's go over and take a look at this. So as of last Tuesday, if we scroll down, combining futures and options and looking at the E-mini S&Ps, futures and options combined, the hedge funds are still on the short side. Today's not going to feel good for them. The commercials are still on the short side, and the small speculators added last week 106,000 long positions. These guys have a really one of the most dangerous signs that I tend to find in my for as long as I've been looking at commitment of traders, a 2-to-1 ratio of net long versus short in the market owned by small speculators. Every blind squirrel finds an acorn, but the longer they stay long and the longer they feel convinced the market's going up forever, longer term and in the next few weeks, that might come to roost, or maybe even by the end of this week. So that to me is a very dangerous sign in the marketplace that we're starting to see another thing that has occurred. The open interest is started to rise relative to the last few weeks. Remember, we were down around 3,400,000. We've been going through this commitment of traders with you guys for a long time, and I even said we're down about 1 million off of the prior year's high. We're at 4,300,000 in open interest, and we were down to like 3,300,000, 3,400,000. Well, we've seen an increase in new net long positions, and folks, it's coming from the small speculators getting long this market on a rally after the 09 low, after it's been in a 3+ year rally since the 11 market correction. And so with a 16% versus 8% net long position, this generally doesn't have a happy ending, a warm, friendly story for the small speculators. So I wanted to bring that to your attention because from a historic standpoint, this, well, granted, they're not wrong all the time, but consistently when it gets to being this type of size, and as I wrote in a book 11 years ago, when the hedge funds and the commercials are short the market and the speculators are the only ones long, watch out. And that's why I say this definitely does implore us to warn you that the market is not in the strong hands. It's in relatively weaker hands, the small speculator. That concludes this week's planning and scanning. And again, as always, if I see something out there, I just wanted to give you some bullet points, what to expect. Yes, I'm still not convinced that the market's going up forever. And I think, as I've put in writing, that by October, mid-October, the correction will come. I think Greece might have been a smokescreen, and we need to kind of stay focused on the health and the breadth of the market. Until those two things improve, and until we start to see more leadership coming from investment field, not small speculators, I'm not convinced that the market is in a healthy spot to be starting to initiate aggressive long positions. With that said, everyone have a great trading week, and for all the dads out there, I hope you had a great Father's Day. Everyone, thank you for joining us, and we'll see you next week.